Hi, guys, and welcome to the 38th episode of the weekly trading wrap up, where we talk about the weekend markets from a trader's perspective, what to focus on, and what to ignore. So let's begin. As usual, we start with a picture of the market, the S&P 500. The red arrow, the red arrow here is showing the beginning of this week, which is August 4th. But it's tough to see because this red candle here was Friday's action, okay? And on Friday of last week, if you recall, everybody was super scared that jobs were revised downward by 260K and the jobs number missed. But apparently this week that means nothing because when that happened, we had rate expectations, like rate cuts expectations go up, okay? To the point where if we look at the Fed Watch 2 here, you can see that in September of 2025, they're probably going to cut by 25 basis points, 89%. Usually when it's over like 75% or whatever, very high number, the Fed usually does it. To me, it's very strange that the Fed is going to cut at all-time highs. It shouldn't, but let's see what happens. September is going to be weird. But going back to the technical picture, bullish, okay? Monday, Tuesday, Wednesday, Thursday, Friday, the technical picture is clearly bullish. We don't even have to, but we can show the moving averages. The 50 is the red, still going up. Upper sloping 200. It's just a beautiful bullish picture, if you will. Okay. However, I still have my short exposure. I'm going to get rid of this this arrow here. It's bothering me. Okay. Let's have a more clear picture. Okay, so technical picture bullish. You can't even argue with that. We're approaching the highs. Okay, the question is, are we going to start getting exhausted with this buying and fall over, or are we going to break to new highs? Okay, that's the big picture. Okay. After the technical picture, we usually look at the sentiment. Of course, the fear and greed index. It was at greed. It went to neutral on Friday here. This big drop, we were at neutral, and I was hoping we would continue down to fear. But nope, another 1 or 2 or 3 days after Friday, we could have had it, but nope, because it dropped a lot to neutral and then back up to greed. We're resuming the bull market. Still not full greed, so it can continue to go. And what shocked me was the AAII Investor Sentiment Index this week was much more bearish at all-time highs, 43% bearish, 31% is the normal, and bullish is basically underneath. The average of 37.5, it's 34.9% bullish. This tells me that people are still not believing this rally, and the bull market is pretty much intact. I see nothing that derails this market without some kind of catalyst. We need something, otherwise it's going to be a slow drift up, like we said. Our second scenario was a slow drift up into new highs. My first scenario, which I thought was more likely, was a little chop during the summertime. But it looks like the summertime is going to be a slow drift, stairway to heaven with small steps, low volatility. Look at the VIX. The VIX spiked above 20, then back down to the lows. Okay, I think it went to 21, 2, yeah, and then back down to the lows. Okay, so I'm not saying we can't correct. I still have some short exposure. Okay, you should always have some short exposure, especially these times when the volatility is super low, because any downward move could expand VIX at any given time. Okay, this is the most dangerous market. You shouldn't be super heavy. Okay, you should take profits quickly and have some protection. Okay, but you still ride it because people are not believing this bull market, given the sentiment. So you should still be net long. Okay, take advantage. I'm still net long, even though I have short exposure. Okay. So let's move into the macro. A couple of things came out this week. Of course, we have initial claims. Initial claims ticked up. Okay, because of the jobs report on Friday, I was thinking that these might start ticking up, but it's going to take time. It's not going to take 1 or 2 or 3 weeks. It's going to take maybe a month or 2 before they start ticking up a lot. Okay, so we don't know yet. Even though the jobs were very dismal, people are still not filing for unemployment in big numbers. Okay, so it ticked up to 226,000, still within our normal range. Let's see what the max is. I won't show the max 5-year. See, it's almost nothing here. We need to go much higher before there's some kind of pain. Okay. So initial jobless claims starting to tick up, but not that big yet, which is very positive for the bull market. Okay, and the other thing that came out in terms of macro this week was the ISM services, which is 50.1. It always stays above 50. I mean, if you look at the services, they've almost rarely dipped below 50. Okay, so it's a little bit concerning. It's hugging the 50. It's not much higher, but we're still chugging along. Even though the jobs have been revised downward, the service is doing okay. So that's the macro. We have a bullish technical picture. Macro is still bullish. Sentiment analysis is still bearish, which means it's bullish for the market. It's a contrarian indicator. So this market, I feel, is going to start topping off when we have a lot of bullish sentiment for like a month or two. Okay, get a lot of people long, even though right now a lot of people are getting long. Doesn't seem that way. Doesn't seem that the sentiment doesn't seem that way. It doesn't seem that people are euphoric of this bull market. So what is the old adage on Wall Street is that a bull market climbs a wall of worry, and that's what we're doing right now. Okay, so let's move on to a third segment of the weekly trading wrap-up, which is things that interest me. Okay, so I thought this time we'd go over earnings of the big companies, okay, especially the big companies that announced this week, just to give us a gauge of whether the bull market is going to be healthy or whether it's going to be, is it weak, is it running on empty? Let's see. Okay, so on Monday, a couple of noted companies that announced earnings were PLTR, and it crushed it. Okay, crushed earnings, 15% beat on earnings and 7% beat on revenues. This company is very, very quote-unquote overvalued, but we don't care about that. We know that people are really buying that. Look at that. This is parabolic move, okay? After the earnings, it blew it out. So that's a column on the positive side for this bull market. People blowing out earnings, and you have positive rips to the upside, okay? Because the sign of a bad bull market or the bull market's coming to an end is that you have earnings that are beating, but the stock goes down, okay? So what else? What are the Mag 7 type stocks? We know that Microsoft last week blew it up, killed on earnings, but now it's revising downward. So this big tech company is not doing so well. Amazon, same thing with Amazon. It beat 26% beat on earnings. It's pretty good, but it was going up the whole week before that, the whole month period. So it could have been priced in, but it's coming back. Okay, so another big one there. NVIDIA, again, last week it announced, it's going to announce. So rocket ship, still going strong. Okay, but let's go back to the big companies that announced this week. Okay, so we have some mixed earnings announcements for the Mag 7s, I say, the big tech. But so far, PLTR did well, and the other big company was AXON. Okay, these guys do the body armor for cops, as well as tasers and everything. So they beat on earnings. This is all-time highs for AXON. Okay, so earnings beat by 45%. So you're going to have this hold. So another positive on the bull column for these companies. Okay, we have AXON, we have PLTR at all-time highs. Okay, on who else did it on Tuesday? Who else announced that was big? AMD. This is a pretty good gauge of the market because even though the earnings did fairly well, flat, whatever they did as expected, Trump announced 100% tariffs on semiconductors coming into the States. So the semiconductor sector is, despite that 100% tariff, it's still holding the highs. So that denotes strength. Okay, so even more on the bullish, another check mark on the bullish side of the ledger. Okay, what else came out on Tuesday? That's about it. On Tuesday, on Wednesday, what do we have? We have McDonald's, big one. What's Main Street doing? Did they beat? I think so. Yep, they beat, but it's a slow mover, okay? Hovering at highs. Market's not devastated right now. There's not a recession. People are still eating at McDonald's. Maybe if there is, it will be even higher because more people will be eating at McDonald's instead of going out. But, McDonald's did pretty well. What about Uber? Uber beat. Flat. So, still, at all-time highs, Uber. Okay. Who else? Another big stock, that retail stock that usually beats, is Shopify. Not usually, but this time it did. 21% beat on the bottom side, 4% beat, 5% beat on revenues, ripping into new highs. And is it new highs? No, it was much higher during the the pandemic move. But it's up there. It's getting back up to the pandemic highs. Okay, we're not overvalued. Maybe overvalued, undervalued. These are just points of view. Okay, so we have Shopify beating here. Who else came out on the 7th, which was yesterday? We had Constellation Energy, one of these uranium guys, utilities, at highs, doing well. Earnings beat, revenues really beat, but earnings not that much. Revenues really beat. That's a big move. So the uranium sector vis-a-vis the as expressed to the utilities is doing very, very well. Who else? Monster energy drink, another big one. Boom, beat. Even though they sold off, it massively increased by like, what was the beat? By like 30%? What is it? 6, 7%? Okay, not bad. New highs. Monster energy drink. You think they would be good? They would be doing good, or doing well, I should say, if we're in a recession? Not yet. Maybe soon. Okay. So far, not yet. Datadog also announced beat, but that went down. Beat by 12%, but then went down. Not at the highest. Okay, this is a previous winner, but not a today's winner. And on Friday, who announced today? Nothing big. Nothing big today on Friday, but another stock, another previous winner that just reminds me was the Trade Desk. The Trade Desk announced, flattish type stuff, but bad guidance, so boom, down. Got knocked down by 38%. It's a big hit on the Trade Desk. This was a previous darting. In fact, by the end of the beginning of 2025, it was really doing well until boom, hits. So you had the old winners are down or flat, and you have new winners like AXON and PLTR at highs. So earnings was doing pretty well for the new winners, average for the big tech, even though they're near highs. But everything is basically, you have mixed results, but the new winners and the tech are trading at highs. So this solidifies the bull market. Okay. Now you're going to hear stories like this guy on Twitter, the Kobeisi letter. Okay, he's very, very generally very bearish, and he says it's official. The top 10% of the largest U.S. stocks now reflect a record 76% of U.S. equity market. So the market cap of the 10% of the biggest stocks is basically 76% of the market. 3/4 of the market value is the 10%, the top, let's say, top 50 stocks out of the S&P 500. Okay. It might be more because maybe he's doing it a little bit, maybe the top 1,000 stocks, who knows. But this is of the S&P 500, I'm guessing. Okay. In the dot-com bubble peak, it was 73%. We're at 76. So we're higher than the dot-com bubble peak, which was around here. No, where is it? 2000. So we're higher than 2000. And he's saying in the 1980s, this figure was 50%. Okay. So we're witnessing history, okay, but this is a very bearish narrative, which bleeds into this sentiment of bearishness while we are at SPY all-time highs. This is a wall of worry, okay? The fact that 10%, the top 10% of the stocks represent 3/4 of the U.S. equity market in terms of market cap could still continue. It could go on more than you think. Okay, so this is not this guy has been wrong for a while. I mean, you shouldn't look at this as a reason to short. Okay, we should be cautious. Yeah, we might be getting long in the tooth, but long in the tooth could last another year, another 6 months. Okay, we're trading here. We're trying to make money in the next month, 2, 3, 4, 6 months. Okay, and so far everything is saying bull market and wall of worry in terms of sentiment, fear and greed, and anecdotal Twitter, investing universe type chatter is still fairly bearish. So that's good for this bull market. It's going to continue. Not that it can't sell off a bit. You don't know, okay? Because we're at a point where VIX is very low. So with a low VIX, you should expect it to rip up again, okay? So ups and downs, goes up and down. I would have loved, like last week I was saying on the Friday as I was recording it, I would have loved for the market to touch this. I would be buying a lot more. Okay, I didn't buy anything yet. Okay, I'm still riding my longs and looking to buy more, but not at this time. Okay, I'll just keep making slowly, a little bit at a time. Okay, so that's how this bull market tends to go. You know, people hate it, sentiment is still bad, and we're at all-time highs. If the Fed cuts in the next meeting, rocket fuel, we're going into melt-up scenario. Okay, cutting at the highs, rocket fuel. Okay, unless we have a dramatic drop in the economy, like in a month, like a COVID type drop, and then it'll go down. But if the Fed cuts, rocket fuel. Okay, so what else did we see this week? What I want to touch on is like little tidbits here and there. We saw that there was going to be 100%, oh no, not 100%, but Trump is putting 25% tax on India over the Russian oil trade because India is buying a lot of oil from Russia, and Trump doesn't like that. It's bypassing the sanctions from Ukraine because of the Ukraine war. So let's see what happened to oil during that time. Down. You would think oil would be spiking. Nope. Oil still hovering in the range, USO, but it's the same for Brent. Okay, Brent crude overseas, you'll see, down. See, even lower. So Brent oil down. So nobody takes Trump seriously. This is Taco Trump again, and you can easily bypass tariffs. Okay, if India wants Russian oil, India's going to get Russian oil. Okay, so don't fall for the hype. That's why oil is down. Okay, it's not going to spike. The other thing we should look at is Dixie, the dollar. Okay, which will dovetail into the next point. But the dollar right now, we said it was getting oversold around here, and we were expecting a big bounce. You're getting an oversold move, okay? Like, technically speaking, too, like this is the RSI here. You had positive divergence, you see, as the price was going down, touching this key level. The RSI was going up. Price action was going down, RSI was going up. Okay, so we predicted that the gold would have an oversold bounce. I'm not saying it's going to go back to, we didn't say we're going back to highs, but it's going to have an oversold bounce. However, that oversold bounce has materialized, okay, and now it might resume its downward path. Okay, which brings me to final point we'll talk about today is gold. Okay, as the dollar is going down, gold is going back up again. Okay. So here we have gold staying at the highs. I'm going to say it again, staying at the highs with market going higher. This should not be happening, and yet it is. But I'm not going to repeat myself. You all know the story. However, what should be noted is that GDX gold miners, okay, have massively moved. As gold was staying flat, look at this. This is for the entire week, okay? I think this is Monday. Monday is this big green candle. GDX, which is the gold miners index, ripped for 5 days in a row. Okay, as gold was basically flat for the week, slightly up, okay? Basically flat for the week, because this is Monday, okay? This was the Friday move on the fear, but as the fear, look, this big candle here was the fear of Friday's big drop in the market here on SPY because of the jobs report, okay? So you would think that as SPY recovered, that gold would fall and give up that gain, give up this gain. Nope, it keeps drifting higher because fundamentally gold is, there are other reasons why it's going up. Okay, again, foreign central bank buying. However, let's go back to what I was trying to say in the beginning is that GDX, finally the miners are catching a bid. This is a big move in GDX. Okay, it's up from what 52-ish to 58. That's a 6-point move. That's like a 10% plus move in a week with gold basically flat, not even up, 1%. So now the money's starting to come in. Okay, like we were saying before, what we were speculating would happen is actually materializing this week. We speculated that as long as gold maintains above 3,000 and the market sees that it's not a BS move, it's not going to be a move like in the past 10 years where it spikes up and then it goes back down immediately. In fact, gold is still staying high. So this is giving more confidence to generalist investors and funds to allocate into the gold mining space. Okay, because gold miners have been on a tear. Biggest free cash flow margins of any industry. So now it's happening. Now they're starting to put money into the miners. And if you can see from this metric, which is miners versus GLD, massively outperforming. Okay, we're not even close to the halcyon highs of 2011. Okay, even more because 208. But this is a picture, a chart of GDX gold miners versus gold. Look, forever here they've been underperforming gold forever. Okay, it's telling you. Oops, let's get this. It's telling you that forever, for a decade, since this is 2015, for a decade, miners have been flat as gold has been ripping. Okay, is this about to change? If we start getting, like, this is just a 1 week section. If we continue to get this and even move up to the 2016 move, like I was saying before, the move from 2016 was amazing. 8 months of brutality, or I should say, 8 months of, heaven, if you're a gold mining investor. This could happen again. I sense it's going to be happening soon because the picture now is better for the miners, is better than 2016 by far, by orders of magnitude, at least 2-3 times better, at least. I'm underselling it. It could be 5. Okay, so if we get back to this outperformance, we could have a really big. This could double. This could go from 18.5 to 36 easily, and it would still be undervalued. Double meaning the ratio could double. So gold miners could be going up way faster than gold in the coming months. Okay, and that's what I foresee. What we thought was going to happen is starting to materialize this week. It's very early. Maybe I'm too early in saying it, but it's good to notice it before it happens. Okay, so GDX in absolute terms and not relative terms is making a big move here. Okay, making a big move. Let's keep this in note for next week. So in recap, we have bullish stock market. Okay, we have sentiment still pretty low, very bearish, while the market's at all-time highs. The Fed could theoretically, I can't believe I'm saying this, the Fed could cut at all-time highs. 90% chance they're going to start cutting in September, with 3 cuts priced in for all 45% chance. It's close, 3-2. 3 cuts priced in or expected in all of 2025. Okay, the macro still hasn't broken down yet, and we have, the Twitter space still bearish on the market. So we have a really strong bull market going. Let's see how long it lasts. However, you should still have short exposure just in case. Okay, because you could get violent moves downward. You never know what's going to happen. Okay, and the fact that I can't see a catalyst of why this market can come down in the short term is, feeding into that complacency, and people are starting to get a little bit complacent. I'm guessing. I don't know. This is just speculation, so I don't trade based on speculation. I'm just saying I can't even see a catalyst of why the market go down, which means I should be scared. Okay, when I'm bullish, I should be scared. When I don't see a bearish catalyst, I should be scared. That's why I have my short exposure. And that's it for this week. Let's see next week if the bullishness continues. I think it might. Later.